This was posted on the Silver Doctor's website, October the 30th, titled Titanic Battle Underway Over Return of the Gold Standard by Jim Willie. Jim Willie of the Golden Jackass. The Western Central Bank franchise system is totally broken, totally insolvent, and totally corrupt. It invites the gold standard return. The entire financial system is built upon a debt-based monetary system. The debt saturation process has run its full course. The central bank heads have been covering the sovereign debt for the last 5 years, having rendered their balance sheets as ruined. Debt is at obscene levels, like 19.7 trillion US dollars for the US government. No debt limits are in place anymore, a signal that most likely it has already defaulted. A hidden game is underway, with control lost to the creditors, even as they attempt to salvage their debt holdings. The major central banks continue to manage badly their great game, where money is fake, phony, and a farce. A titanic battle is underway, where the Eastern nations are disregarding their US Treasury bonds and doing so in tremendous volume, while they set up many platforms and pieces to the gold standard. The US Federal Reserve monetary policy of hyperinflation has failed to revive the US economy, failed to legitimize the debt securities, failed to halt the financial corruption, and failed to stem capital destruction. The official monetary policy has only succeeded in preventing the failures of almost all Western banks. They are all insolvent, mostly supported by narco money laundering in the hundreds of billion dollars. The Eastern superpowers are leading a campaign to put aside the US dollar-based financial system, isolate it to the sidelines while arranging a new system. The gold-backed system will be complete with its currency, sovereign debt securities, transfer systems, global offices, and debt rating agencies, maybe even debit cards. The East strives to install the gold standard as the remedy to the ongoing global financial crisis. The West has made exactly no movement towards solution, remedy, or enforcement against bond. 4 graphs display the broken, unfixable, bizarre situation. Graph 1. Balance sheet destruction. Central bank balance sheets could take decades to normalize, so the conventional thinking goes, their balance sheets will never return to normal. Most assets of toxic paper are far more worthless than junk bonds. A normalization process would require at least 50 years of more financial repression and deep corruption. A massive global debt write-down of sovereign bond is coming. On the back end of the global financial reset, think paradigm shift of the most disruptive type, while power shifts eastward. The risk of war rises. So on the graph below, the red line is representing the US Federal Reserve, and the green line is representing the Bank of England. Both. And if you look at what happened in the peak during the 1950 cycle, we're setting ourselves up for an even greater peak in 2016 to come crashing right back down. That's the whole thing about cycles, guys. They can't infinitely go up. There comes a point where the natural reset occurs. That's a market cycle. It goes on to say, the big Western banks find themselves in an impossible catch-22 situation. The markets are addicted to QE and its destructive money hyperinflation. Federal Reserve policymakers have acknowledged that their $4 trillion balance sheet will not shrink anytime soon. Also, Bank of England officials talk of crisis-fighting tools as semi-permanent fixtures. In Asia, the Bank of Japan has developed a new monetary policy framework that features admitted finite QE. The financial crisis, the balance sheet volume to GDP ratios for the Bank of England and the US Fed have peaked at around 25% the highest level ever recorded. Uncharted territory has been entered. And that's a funny choice of words is used because Alan Greenspan came out some time ago stating that we are in uncharted territory. Nothing like this has ever occurred before in history. The US Fed balance sheet ratio to GDP previously reached 23% in 1940 during World War II. The Bank of England ratio approached 20% in the 1730s during the South Sea Bubble Scheme, 1816 and 17 during the Great Recoinage, the 1830s and 1840s following other wars, and in the immediate aftermath of World War II. In every scenario above, the central banks managed to unwind their balance sheets, but then the great unwinding took decades, up to 60 years in some cases. This time is different. No economic growth is anywhere remotely on the current horizon, nothing sufficient to unwind the tremendous debt burden. This is where the convention analyst turns stupid. Even locked in fantasy, they assume the GDP growth has been around 3% in recent years, when it has been closer to -4% or -5% each year since 2008 in a fierce recession with strong feedback loops. We are not on the verge of an economic expansion. We can relieve the balance sheet's toxicity, but rather a financial reform to sweep away the US dollar and to render its United States Treasury bonds as near worthless paper. The next chapter will be centered upon the gold standard, first in trade payment, next in bank reserves, finally in currencies. The installation of the gold standard will render almost all US dollar-based debt securities as toxic paper, much like African government bonds. QE might have bought time for the big US banks, but it guaranteed the kill of the US economy as host, and the default of the US government debt. No semblance of return to normalcy can come. This is why war is being vigorously pursued to retain power. 2. Concentration of central bank assets. Big central bank assets have jumped the fastest in 5 years to $21 trillion. The toxic sovereign bond bubble is the largest bubble in history. 4 major central banks control 75% of all central bank assets. Any currency reform must come from a major nation and its lead. The majority of the world's central bank assets are controlled by 4 sites: China, the United States, Japan, and the European Union. The next 6 each account for an average of 2.5%, namely the Central Bank of Brazil, Switzerland, Saudi Arabia, the United Kingdom, India, and Russia. The major nations control toxic vats of deeply impaired debt paper, which nobody wants. And the source of this chart is from Bloomberg. The big 4 central banks are often called the major central banks. They are from the so-called industrialized nations, when in fact they are from former industrial states with a strong leaning towards new third world status. They control the global financial structure and rig markets in order to keep it stable. If any changes are to come to the US dollar and the king dollar reign of terror, the reform will be done by a major central banks with support from the standard in certain key spots. The best one can expect is a dual financial universe, where the US dollar is gradually phased out. Graph 3, dumping the US Treasury bonds in worldwide trend. A truly massive international dumping of US dollars has entered a second powerful phase. The Saudis and China recently dumped huge blocks of US Treasury bonds. Foreign central banks liquidated a record $346 billion in US government debt securities in the last 12 months. The trend having accelerated, numerous factors contribute to the dumping, which manifests the fading global confidence in the US dollar. Amplified quantitative easing volume soaks up the large volumes dumped on the bond market, further eroding the faith in the fiat currency. 1 month ago, a troublesome sharp decline was seen in the US Treasuries held in custody, which is the formal way to describe central bank holdings kept at the US Fed computer banks. The amount fell by over 27.5 billion US dollars in a single week, the biggest weekly drop since January 2015. 1 month later, the trend continues with powerful force. Enough to capture global attention, the custody volume fell sharply again by another $23.3 billion in the past week, pushing the total amount to $2.805 trillion, another fresh post-2012 low. The foreign central banks have continued their relentless liquidation of US debt securities held in the US Fed's official custody account. History is being made, as global sentiment and conditions are changing in fierce mode. The king dollar throne is having its legs removed, kicked out and cut off. Most financial analysts refuse to put the factors in such stark terms, but the jackass does so naturally and without hesitation. These dynamics can be identified as the principal proximal factors detailed in a hat-trick letter for the October edition in the reports. The source of this chart is from Zero Hedge. Massive dumping pattern by foreign central banks since late 2014 from economic distress, lower oil price and declining US dollar confidence. A month ago was observed a massive $343 billion in US Treasury sales by foreign central banks in the period July 1st, 2015 to July 1st, 2016. Something truly unprecedented in size. Fast forward to the latest monthly update, which was posted as July data. All have gone worse. The run-in latest 12 months, LTM, in foreign central bank sales shot up to a new all-time high of $346.4 billion. Thus over 1/3 of $1 trillion in Treasury debts were sold in the past 12 months. Recall in that the 3 months late in 2015, the Chinese sold $250 billion in US Treasury bonds, which forced the IMF inclusion of the renminbi into their formal basket of currencies. The dumping has been global, massive, and without precedent. China is the major seller, while the Saudis are the newest sellers. The broken outhouse of Saud requires the funds to offset the collapse of the petrodollar and to backstop the country's soaring budget deficit, made worse by the obscene Yemen war. The official story is told that private investors, both foreign and domestic, are soaking up hundreds of billions of dollars in central bank holdings being sold on the bond market. The other dubious story is that bond yields are rising slightly, given the newfound concerns that the US Fed, the Bank of Japan, and maybe even the Euro CB will soon taper their purchases. The bigger factor, surely not private investors, is the US Fed ramping up hidden QE volume in a huge way, buying the massive bond dump, all kept secret and quiet so as not to disrupt the pristine AAA rating of the US Treasury bond toxic paper. Expect continued debt monetization of the US government deficit, of which perhaps 75% is supported by the African-style printing press. The US economy cannot grow its way out of debt. They will monetize it until the default on the global stage. And it's really quite simple, guys. You cannot pay debt off with more debt. The QE process cannot take in all the dumped US Treasury bonds without physiological damage. The US dollar confidence is eroding globally. Faith in the US dollar is eroding very quickly. The nation is moving along in the US isolation process. Identified as a rogue nation on the financial front, terrorism front, laced vaccine front, and war front. Just the jackass opinion. Graph 4. Evidence of US Treasury bond bubble versus diamonds. The US Treasury bond bubble is the second biggest asset bubble in history, behind the residential real estate bubble in the last decade. The US Treasury bonds are a massive sanctioned Ponzi scheme, signifying the default of the US government debt and failure of its sovereign bond. The elite controllers talk of a flight to safe haven, when in reality it's a leap into a black hole and toxic vat. Motive is to keep US government borrowing costs to minimal levels while the debt soars towards the $20 trillion mark. The gigantic black hole attracts legitimate capital from around the world. All will be subject to heavy losses. The US Treasury bond asset bubble is supported by three major forces: the US Fed monetary hyperinflation, the interest rate swap derivative contract, the bond carry trade managed by Wall Street banks. More details are provided in the hat-trick letter for October. The relationship between top-tier assets should remain stable, such as diamonds, special gemstones, classic artworks and sculptures, special jewelry items, icon properties and more. However, the bond price for US government debt has gone haywire, rising far beyond anything reasonable. Check out an unusual chart above for the bond value versus the standard benchmark diamond price. There is a clear, visible, nasty bond bubble which will burst just like the US housing market bubble that nobody in the mainstream moronic arenas expected. The jackass correctly forecasted the housing market bust 1 year before it occurred. No longer are diamonds a girl's best friend. It is US Treasury bonds. Gold trade note introduction. The gold trade notes for trade payment might be coming into view, initially with commodity transfers, later swap contracts, and finally gold-backed short-term notes, which supplement the US Treasury bill. One might think of used newspapers on the floor, or of the dodo bird. The trade might be made in exchange for either goods delivered or US Treasury bills held. Detect a growing connection to finished goods being withheld from delivery. This is probably another sign of a refusal of US Treasury bills as payment. As a footnote, be sure to know that the preliminary steps to a global financial reset will not be laid out in full disclosure for public benefit. It represents a tremendous investment opportunity for the elite, which they will never tend to share. In fact, the reset might be well along before it is even recognised. Enter Euro Raj, main thoughts, and open analysis, for which much gratitude is given. The jackass believes a few critical elements to the reset are in place. More details on DIP financing feature is included in the September hat-trick letter report. A major hitch obstacle can be inferred. Payment in US dollar terms might be the clot in the artery. Demands might be for hard asset swaps, and the contract security from large-scale commitment of commodities, facilities and property. The swap trade is coming into view. Presage of the gold trade note. The jackass concludes, the US dollar rejection could be lifting its head within its gathering storm. Without clear indication, it is indeed difficult to identify all the elements when hidden deals at the highest levels are underway. A friction is omnipresent. The Bobcat Corp rejection of US dollar bills at Pacific ports is a clear story. For every one story recounted, there are 10 to 20 not yet heard. My firm belief is that in Asia banking systems, they do not want the US Treasury bills anymore. The banks in Asia are trying to dump them in heavy volume, not accumulate more worthless toilet paper. Finally, the sharp blowback from printing QE money has hit. The US Fed monetary policy saves the big insolvent banks but kills capital. The result has finally seen manifested in US dollar global rejection, or at least hints towards the same. Asian banks still hold vast sums of US Treasury bonds. They are not going to announce the rejection, but instead fight behind the walls for better terms of payment. even as they pursue the gold trade note for payment at airports. It is coming, like daybreak follows the long night. New Scheiss dollar and gold trade standard. In time, expect an eventual refusal by Eastern producing nations to accept US Treasury bills in payment for trade. The IMF reversal decision assures this US Treasury bill blockade in time and might accelerate the timetable. The United States government cannot continue on 5 glaring fronts of gross negligence and major violations. These violations have prompted the BRICS and alliance nations to hasten their development of diverse non-US dollar platforms toward the goal of displacing the US dollar, while at the same time steps towards the return of the gold standard. The new Scheiss dollar will arrive in order to assure continued import supply to the US economy. It will be given a 30% devaluation out of the gate, then many more devaluations of similar variety. The new dollar will fail all foreign and Eastern scrutiny. The US government will be forced to react to US Treasury bill rejection at the ports. The US must accommodate with the new Scheiss dollar in order to assure import supply and to alleviate the many stalemates to come. The United States finds itself on the slippery slope that leads to the Third World, a jackass forecast that has been presented since Lehman fell, better described as killed by JP Morgan. The only apparent alternative for the United States government to lease a large amount of gold bullion, like 10,000 tons, from China in order to properly launch a gold-backed currency. Doing so will open the gates for a generation of commercial colonization, but actual progress in returning capitalism to the United States. The cost would be supply shortages to the US economy, a result of enormous export increase to China. The colonization has already begun, with secret deals galore. It is very unclear what deals are being struck in order to arrange for the US government to have a proper gold reserve hoard, for backing a new legitimate US dollar. Meetings at very high levels are in progress, with little, if any, popular representation. Only elite members present. Failure to produce a legitimate, bona fide gold-backed currency would mean the United States must proceed with the new Scheiss dollar and a legitimate, fake phony farce of a currency. It would be subjected to a series of devaluations. The result would be heavy, powerful, painful price inflations from the import front. The effect would be to reverse a regeneration of exported inflation by the United States. The entire US economy would go into a downward spiral with higher prices, supply shortages, and social disorder. However, the rise in prices would come from the currency crisis, and not so much from the hyper-monetary inflation. That flood of trillions of US dollars has been effectively firewalled off. And that's where the article ends, guys, and that's by Jim Willie of the Golden Jackass. And here's the details regarding that. And I'll leave it there, guys. Thanks so much for watching.